Welcome. Thank you for joining us today. We're happy to have Wes Shannon here to talk about financial scams and how to avoid them. Please post any questions you have in the chat and we'll get to them at the end of the program. So I'm going to start by introducing our presenter. After working decades in the insurance and financial services industry, Wes Shannon left insurance to do full-time financial planning and investment advising. He is the founder of SJK Financial Planning and specializes in working with business owners. Over the years, he has worked with many small business people, especially helping them retire, or as Wes will say, setting up the end game for their business. He has a Bachelor of Business Administration from UNT, majoring in financial planning, and as a certified financial planning professional. He enjoys the outdoors, participating in backpacking, hunting, fishing, canoeing, and camping. He likes to cook, garden, and read, and he has a passion for old movies and is a Turner Classic Movies fan. So Wes, I will turn it over to you, and I will come back at the end for audience questions.
All right, thank you, Jennifer. Let me share the screen here and get us started. There we go. All right, let me start off with a little story. Excuse me, I've had a cold. I'm recovering, so I've got a cough drop in my mouth, so please forgive me for that. But a few years ago, I'm standing in the grocery store line, and I look over, and there's a Texas Monthly sitting there, and it's got two of my favorite singers, Robert Earl Keen and Lyle Lovett, on the cover. So I pick it up, and I think, this is great. I'll take it home and read it. So I get home, and about 10 pages into the magazine, I come across this full-page ad. And it caught my attention. It said, look, if you look at it, it says, you know, are you not making 5% on your CDs? Well, nobody's making 5% on CDs. And it says, this is a CD alternative. It's going to pay a minimum of 5% a year, pay it monthly. You don't have to wait to the end of the term to get your interest. They said it's 100% secure. There's no long-term commitments. They tell me it's not insurance, it's not an annuity, it's not stocks, it's not bonds. Not real estate investment trust, it's not gold, it's not silver, it's not commodities, and it tells me there's no transaction fees, and it's 100% of my money will go to work immediately. They talk about they've been servicing Texans for 16 years, Old Security Financial Group. They've got their phone number, their website. They say they are officed in Dallas and Austin and San Antonio and Corpus Christi and numerous other cities, and even got Better Business Bureau down in the corner, and a 401k and IRAs can apply. Well, I looked at this and a lot of red flags went off. Now, I felt like I better set this aside and investigate this, because if there is such a good deal like this out there, I wouldn't want some of my clients to miss out on it. But I was very skeptical. And the reason I was skeptical was there was a lot of things in this ad that were not what I would consider compliant to the rules for advertising for investment firms. Son of a gun, 2 days later, I get an email from the Texas State Securities Board where they are issuing an emergency cease and desist order for Old Security Financial Group. And it said they've been running radio ads in Houston and San Antonio and a big page ad in Texas Monthly, and that they had failed to disclose that it was an unregistered investment in promissory notes, and that the people that were selling them were had criminal backgrounds and were not registered to sell securities, and had already been in trouble in the state of Massachusetts. And I was just shocked. I was like, I couldn't believe this. Just 2 days after I bought the paper with the ad. And so I'll just use this as an example of how fraud, I often say scams are well camouflaged. And remember this, that just because it's in a prominent magazine or newspaper doesn't add any credibility, because as far as Texas Monthly goes, their only concern is if the advertiser pays the bill. They don't do any background check. They don't find out if it's legit. They just want to know if the people that are buying the ad are going to pay for it. So, well, wait a minute, we skipped a slide here. I don't know what's going on. Well, This is odd. Excuse me, folks. We'll just jump right into a case study. The previous slide, which is not showing, is an old quote from a banker friend of mine who explained that what you normally do is you teach your bank tellers what a real dollar looks like. And once someone understands what a real dollar looks like, they can immediately spot a fake dollar, a counterfeit. And it's the same way with securities ads. Because I know what to look for, the fact that it didn't have that jumped out of the page to me, and we'll talk about that in more detail. But the State Securities Board in Texas are the people who regulate these financial scams. And I've got a list here of a few that they've published that they have busted up, and just kind of give you an example of some stuff that's out there. I've even posted the names because this is all public information and it's available on their website. But this James Poe was selling life insurance settlement contracts. Now, he didn't tell anybody that he wasn't registered to sell these contracts, and he was charging these excessive fees of 10, and then later he lowered it to 6%. Well, for you to understand, in the state of Texas and by the SEC, if any kind of real estate investment advisor charges more than 2%, they have to issue a written disclaimer explaining that their fees are excessive. So you can imagine when the regulators saw this guy was charging 10 with no disclosures, that was immediately a problem. And on top of all this, he was promising just an unrealistic return, 75% return on the investment. Well, as you can see down at the bottom, he got put out of business. He lost his registration. The firm was sanctioned. So he was taken out of business and is doing something else these days. The next case is this guy, Derek Nelson. He had a real estate investment program out in Garland, and his investors lost $37 million. He was promising 18% over 2 years and 21% over 5 years. It ended up just being a Ponzi. He was spending the money on himself and to large contributions to his church, which I found a little odd. Unfortunately, the poor people who invested with him only got 3 cents on the dollar back. And Mr. Nelson is now serving a 19-year prison term for his fraudulent scam. William Reisinger out of Round Rock, he had an oil and gas investment program. He had 69 investors purchase units for a total of $4.5 million. They were going to drill wells in South Texas. He never drilled a single well. He spent all the money on his personal expenses. When he was arrested and put out on bond, he went out and spent another $500,000 of investor money in Vegas. This is a crazy case. He's serving a 160-month federal term after he plea bargained out for wire fraud and money laundering. Unfortunately, the investors didn't get any of their money back. Michael Collins in Alice, he had a stock trading scam. He told people, he said, I'm an excellent stock trader. I'm going to make these big returns in just a week or a month or in a few months, and you're just going to get these incredible returns on your investments. He raised $5 million. This is a Ponzi scheme. Again, he was using it to pay older investors with new investors' money. He failed to disclose that he had lost his license to sell securities back in 2008. And he also had a large tax lien with the IRS, about $74,000. He's currently serving a 15-year prison term, and unfortunately, those investors didn't get their money back. I guess I had my slides out of order. This is the slide I was looking for about if you know what it looks like, then if you know what the right thing is, the wrong thing is going to jump out at you. And that's so true. So let's talk a little bit about what are the right things to look at an investment offer. First of all, the Securities Exchange Commission and the Texas State Securities Board really frowns on any investment offer promising an actual % of returns. If you do suggest a return on the investment, you have to have an asterisk and lots of fine print and footnotes to explain all the risk associated with it. So it's a legitimate offer won't say, hey, you'll make 5% an annum per minimum, minimum of 5% a year. That's right off the bat, and there was no footnotes or asterisks on that ad. We'll go back and look at the ad here in a little bit, but that's one of the first things to be wary of, is if someone's promising a return. Second thing is they have to put a physical address. They have to put the street number and the city and the zip code of where their office is. Can't even be a P.O. box. Remember in that ad, it said we have offices in Houston, Dallas, Austin, San Antonio. You can't say, it has to have an exact address so people know exactly where the physical location of the company is that's offering the investments. Also, you have to be very specific about what the investment is. You remember that ad? It had a whole list of what it wasn't. Remember, it said it's not insurance, not commodities, it's not gold, it's not real estate, it's not stocks, but it didn't say what it was. A legitimate investment offer has to be very specific in what it is you're investing in. It also has to disclose the cost. Now, folks, we all know everything has a cost. Anytime you buy or sell something, there's a cost affiliated with it. And that ad kept saying there's no cost to you. Well, how are they paying for the ad? Okay, so they have to disclose the cost that's affiliated with the investment. Sometimes they bury that cost deep down in the prospectus or in the documentation, and you have to kind of go hunting for it, but it has to be disclosed. Even on a one-page ad, they'd have to say what the costs were. Also, remember they had the Better Business Bureau button down in the logo down the corner of the ad? That is prohibited. You cannot put third-party endorsements on an investment offer. The fairness requires that if you're going to have someone give a testimony, you better show all the people that have a negative testimony about it. It has to be full disclosure. So some of the warning signs of fraud. First of all, fraud, hucksters, scam artists, they prey on affinity. They try to get their bona fides, their trust built from being affiliated with some affinity group. Usually church, religious organizations are fertile ground for this. There was a investment guy on the radio named Doc Gallagher, who was on all the Christian radio stations, published the book, Jesus Christ Money Manager. And Doc was busted a couple of years ago, and there's about $8 million has been lost by elderly investors, and he didn't even have a securities license at the time. But people affiliate themselves with these organizations in order to gain the trust of their victims. And so they're fertile grounds for this kind of fraud. It's all about they're trying to win your confidence. So be wary of someone who's playing that affinity group card very strongly. Like, oh, I've been a member of this church for a long time, or I've been a part of this country club for years. Watch out for that. That shouldn't be the reason to automatically trust someone. Also, advertising, like I said earlier, there's nothing to, because there's an ad in a prominent newspaper or magazine or on the radio or TV, doesn't mean anything. Radios, advertisement, and TV advertisement, all they're concerned about is, does the advertiser pay the rate? Okay, they're not under any obligation to know whether it's a scam or not. So that should never be an influence to you about the credibility of some investment opportunity, is because, well, I hear them on radio all the time. That doesn't, there's no validity to that. Also, the free lunches. Boy, we all get hit about that. Once I started getting white hairs in my beard, I started getting and joined AARP. I get all these lunch offers. Well, just recognize there's nothing wrong going to the luncheons or dinners, but just recognize it's a marketing event. They're there to sell you something. And the more something has to be sold, generally, the less attractive it is. You know, a very good investment doesn't have to be sold very hard. A lot of people are standing in line. But so when there's a free lunch and there's a very a high pressure sales program going on, there's usually a big commission, big fee to the person or company who's selling it. And it's just a breeding ground for fraud. You just have to be careful with those. Another thing going back to that is that, as my dad used to say, before you make any big decisions, sleep on it one night. Well, a high pressure fraudster, he doesn't want you or she doesn't want you to leave the room till you make a decision. And that ought to be a warning sign right away. Also, unsolicited calls. We all get cold calls, scams. Verify things. Even with my known clients, if I get if I get a phone call from a client and they say, "Hey, Wes, I want you to do such and such," I usually say, "Well, send me a text so I can have it in writing, or drop me an email." Or if I get a text message from a client that says, "Hey, move $10,000 out of my account," I pick up the phone and I call to verify. Do a two-step verification for yourself. And also, if there's an investment, be very wary if it's from a cold call. Don't even jump into it until you've done some secondary investigation. Hanging up works really well. Just hang up. You don't owe them, "Oh, I'm sorry," or "No, I'm not interested." Just hang up. Hey, if you don't already have a shredder, get a shredder and use it. Anything that's got any of your personal information on, shred it, especially all these credit card offers. Shred those. Don't let those fall in the hands of people who will abuse that and take advantage of stealing your identity. Like I said earlier, if the more pressure the salesperson puts on you to buy something, the more you should be wary. Legitimate investments never, ever do a one-day only sale. I know sometimes we've seen movies and deals where guys are at a trading floor and they're trading stocks or currency or something, and it's like they pick up the phone, "Hey, we got to act right now. Let's do 100 million," whatever. That is a very limited world that goes on in, and you have to be a part of that. You'd already have a relationship with that firm before they could do anything like that at all. So unless you've had a long-term investment relationship with a firm, never, ever trust anything that says it's only available today. As my dad used to say, it's never the last of the great deals. Sleep on it. So also, ask yourself, do I understand it? Avoid investing in something you don't understand. Ask questions. If you don't understand, don't be afraid to ask questions. You're not looking, it doesn't make you look unintelligent or stupid. It's actually a legitimate investment advisor is going to welcome those questions and enjoy answering them for you so that you become better educated about what your money is doing. So ask questions, get clarification. If someone's throwing out a bunch of jargon that you're not familiar with, stop them and say, "What do you mean by that phrase 4X? Or what do you mean by the current cyber currency? What exact cyber currency is it?" Ask questions to where in your mind, when you spend that night sleeping on it, you totally understand what it is you're investing in and how it works. If you don't, stay away from it. It's okay if you don't invest. Also, don't rely on what someone tells you. Legitimate investment offers require a lot of paperwork, a full prospectus, a full disclosures. Ask to see all of the paperwork. They have to explain the cost, the risk, the obligations, and they must be in writing. If they don't have it in writing, it's not legit. Okay? No paperwork equals no investment. This is very important. And if you can't understand it, take it to someone that does. I often tell my clients, anybody brings you an investment opportunity, run it by me. I'll give you an honest, fair analysis of it. Recently did one for a client that the salesperson, this person's a doctor, and one of his patients was telling about this great private placement down in the Austin area. It involved light rail and developments, and he kept saying guaranteed 8%. So he sent me all the documentation. Well, it wasn't a guaranteed 8%. They were guaranteeing that for accounting purposes, they would consider the original investment to compound at 8% for a refund of the original investment. When we got into it, it was full of fees. In fact, before before anything was done with your money as an investor, the people selling it made $1 million, and that was before one dime went towards the true investment. At best, if it ended up being legit, it would be 10 to 12 years for the investor would start seeing a return on it. So it's all in the writing. Read it. If you can't understand, reach out and get some help to help understand it. But again, you don't want to invest in something you don't understand. This is what I'm saying. Find a professional you can trust, either an investment advisor or a registered rep of a broker dealer. I'll go in a little bit later, another slide, and explain to you the difference of the two. Well, this says a little bit of it right here. RIAs, they charge a fee for their services. Broker dealers and their registered representatives generally work on commissions, and then some are dual licensed and do fees and commission. The difference on the fees versus a commission is if someone's selling you something that's commission based, you're not always sure they're showing you the best thing, if not just the thing that pays the best commission. If you're paying a fee for the services, it shouldn't matter what the investment is. The investment advisor is working for the same price regardless. And because of that, the laws put the registered investment advisors at a higher standard called a fiduciary standard. Again, like I said, I'll have a little summary of this in another slide. Again, the difference is fiduciary duty for a registered investment advisor. A fiduciary means that whatever they do must be in the best interest of the client. Broker-dealer registered reps are a suitability standard, which means what they are talking about must be suitable for you. I'll give you an example of the difference is maybe you're an 80-year-old retiree and government bond fund would be very suitable investment. Well, there's about 400 or 500 bond funds out there. They're all technically suitable, and the rep may be showing you one that pays the highest commission, whereas the RIA has to be in your best interest. So they're going to find the bond fund with the lowest cost and the best returns. Just it's a little bit of a difference, but it makes a big difference over the long haul. Also, RIAs are required to give you a full disclosure. They call it an ADV form, and they give you part 2A and 2B, which is a narrative. It serves to give all the disclosure statements, tells about their business practices, how they get compensated, what their fees are, any conflicts of interest. The full disclosure is trying an attempt to be as transparent as possible. Broker-dealer firms and the registered reps, they have no legal responsibility to inform you of these conflicts. They don't give you an ADV form. There has been some revisions. If they're dealing with a retirement account, they do now have to disclose conflicts of interest and follow what's called the best interest contract. But outside of the retirement, qualified retirement funds, they're just on the straight suitability basis of duty to the client, and they do not do those ADV forms. They are registered with both Financial Industry Regulatory Board, FINRA, and with the SEC. You remember my favorite musical is The Music Man. And if any of you remember that, it's about a huckster who comes to town and sells band equipment and uniforms. And his name is Professor Harold Hill. And the town council kept hounding him throughout the movie to check his credentials. Well, that's exactly what you want to do. You want to check the credentials. And there's two websites here, and I have them on another slide here a little later, that these are websites where you can check the registration and status of either an investment advisor or a broker dealer in their firm. Never, ever, ever invest with an investment professional until you've checked them out on these sites. It'll tell you things like if they have a tax lien, if they've had a bankruptcy, it'll tell you how many customer complaints they've had, their response to the complaints, it'll tell you their experience, how many years, what firms they've been with. It's an excellent place to start your search. A lot of those cases we talked about earlier about these guys that went to prison, most of them weren't registered. That Doc Gallagher that got busted a couple of years ago was not registered. These are things you should look at before turning over your life savings or retirement funds. Now let's talk about what is realistic. Remember we talked about how knowing what's legit helps you immediately realize what's not. Well, don't ever believe anybody that promises over 12% return. A 12% return in any investment would come with an incredible amount of volatility. It could be negative 25 and positive 40 and negative 6 and positive 3. It's going to just jump all over the world in volatility. So if you look here at the S&P 500 index, in 1 year, it's ranged from 45 up in 1 year to negative 26. And over the last 20 years, the index is average for 20-year average is anywhere between 7.7 and 10.4, not 12%. So if you see someone promising a 12% or higher, run away. That is unrealistic. It can't be done. You hear the stories about, oh, I bought Amazon when it was $2 and I sold it when it was $300. Yes, but it took a long period of time for that to happen. The people that brag about short-term trades, sometimes you can make a really high return in a short-term trade, but only for short term. Over the long term, these type of returns are not sustainable. Guaranteed, nothing's guaranteed, okay? The only good guarantor is the FDIC and the U.S. government because they have the biggest army in the world and they can guarantee things. But no, seriously, when something is said it's guaranteed, it's only guaranteed by the quality of the person issuing it. And again, like I said, anything shy of the U.S. government is not a very strong guarantee. Legitimate financial professionals avoid the word guaranteed. The word guaranteed to a legitimate professional is like garlic to a vampire. We'll never use the word guaranteed. We say you got a pretty good chance, or it's over a long time you'll be all right. But we don't say guaranteed. That's a pure sign. That's usually when that word's thrown out. That should be a sign that there's something fishy about the investment offer. I would encourage everyone, this little website right here, the SSB, that's the State Securities Board, .texas.gov/investors. You should consider downloading the Texas Investor Guide. They revise it annually. It's only online. I think as an individual, you can request one printed copy, but it's an online format. You can read it on your tablet or your laptop, even your phone. It is a fabulous piece. It goes through examples of scams and how to avoid them. It explains terms of investment. It explains what different investments are. It explains strategies and diversification, reasonable expected returns, how to find. There's a whole chapter on how to find a financial professional you can trust. It is a wonderful resource, and I would venture to say that anyone who has taken the time to read through this has probably never fallen for one of those scams that we listed up above. It's easy to read. It's in layman's terms. I think it's just a fabulous tool of information. If they would allow me, I would print off dozens and send them out to all my clients. Instead, I send them this link, and every year I want my clients to check it out because it just is a great education tool for everyone to understand investments and how to save for retirement and things like that. So in that book this year, they listed 9 top threats to investors. The first #1 top threat is an unregistered individual investment. Whoever's selling the investment, they're not registered with the SEC or the Texas State Securities Board or FINRA. The way you check that is those two links below that we looked at earlier about the advisor info at the SEC and the broker check at FINRA. Also, I put up here, you may want to write this down, the phone number, Texas State Securities Board. You can call that number, and they're very nice people, and they can look up and tell you whether a person offering you some type of investment is registered. I'd encourage you, even if you already have an investment professional, you may want to go in there and check it. I often go in and check my registrations just to make sure they're correct. #2 biggest threat to investors in the state of Texas is oil and gas. Let's face it, we live in Texas, and you remember the old Eddie, if you're old enough like I am, remember the old Eddie Childs advertisement said that if you don't have an oil well, we'll get you one, okay? Well, that is a breeding ground for fraudulent activity. The best way to do that, to even venture into that, is ask for all the documents and read all the documents. Do your research. Look at the reputations of the people involved. Cryptocurrency offerings. Boy, that's a buzzword. Everybody's wanting to do Bitcoin. Everybody's wanting to do cryptocurrency. Make sure you know the company who's selling it. Do your research. In all these scams, less than an hour's worth of research on the internet would have uncovered them in advance. The other thing about these, for 90% of us, we really don't have any business investing in these type of offerings. In fact, the federal government, the SEC, says that you're not what's called an accredited investor until you have over $1 million in investable assets, or you have an annual income over $250,000 a year with the appropriate business acumen. So when they come out offering these things, they're circumventing the SEC if they're talking to you and you're not qualified to be an accredited investor. So that ought to, right off the bat, ought to tell you there's something fishy about the offering. For most of us that are not accredited investors, these things we shouldn't even consider. We should be sticking with traditional mutual funds or exchange traded funds or individual publicly traded stocks or bonds. So cryptocurrencies, one of the top threats in the last year. Promissory notes, that was that fraudulent ad we looked at the beginning of this talk, was promissory notes. Again, make sure the person selling them is registered. Promissory notes are extremely volatile, and they are subject to a lot of fraud. The talking heads, the private placement offerings, that's what I was telling you about. That's a private deal. It's not registered with the SEC, but it has to be. There are rules to it. The SEC has rules for private placement offerings, the documentation and such. And again, it's only available to accredited investors. The talking heads, people are on the radio and on TV, in the magazines. Again, you better research them. You better go check these 2 links and see if they're registered and what's their history. Just because they're on the radio doesn't mean they're as smart as you might think. Real estate investments, be very wary of these, especially if they're saying how low risk real estate is. Right now, housing market's crazy, but there was a time in Texas in the 80s when housing prices dropped, real estate prices dropped. Remember the savings and loan scandals? So real estate is not low risk. It has its own set of risks. Again, make sure you're dealing with a proper professional. And also, I had somebody bring me through their church. They met a guy who had a real estate investment, and you only need to put $5,000 in. Well, first of all, there's no real estate that you're going to buy for $5,000. He was gathering other people's money to go purchase real estate. It ended up being in the Cleveland, Ohio area. This person, his client, brought me all the paperwork. Guy had a snazzy website. Man, he looked like, and he had some radio presence, and he looked like he was the sharpest thing. I got to digging into it, and his only real estate investment was his grandmother, his wife's grandmother's house that he bought on a what's the term? It wasn't a full deed. It was I'm having a senior moment here. I can't remember the terminology, but anyway, it was a really squirrely deal. And once I explained that to her, fortunately, she didn't invest in that. So be careful with real estate. Do your research. Alternative investments for self-directed IRAs. For whatever reason, it got real popular for people to pull out their 401k, put it in an IRA that's self-directed, and go buy a summer home in Colorado and Airbnb it, and that's part of their IRA. I saw many people do this. There are a lot of expenses involved. Of the ones I personally witnessed, none of them really made any money on the deal. Also think about this. On an IRA, when you become 72, you're going to have to take what's called a required minimum distribution. You're going to have to take money out. Well, if it's all tied up in a house in Pagosa Springs, how are you going to take out $40,000 for your required minimum distribution? You can't sell a piece of the house. You see what I'm saying? So be wary of these alternative investments for self-directed IRAs. It is an area full of fraud, and it's extremely high fees. And then the high yield trading, make sure all the parties and their companies are registered with FINRA and the SEC. And even then, I'd be very leery. Legitimate firms don't offer that to non-accredited investors. So again, write these down, the links. These are your safety nets. I don't know, Jennifer, we may send out a copy of this slideshow if we can, and people can get it from that. Let's go back to our original ad. First of all, at least 5%. Well, we already talked about it. You're not supposed to disclose a return unless there's an asterisk here and about a paragraph of fine print. We didn't have that. That's jumped off the page. Your principal is 100% secured. Remember what I said about guarantees? Secured is just another word for it. You wouldn't see that in a legitimate offer. No long-term commitments, short duration, that's okay. Then we get a list of what it's not, but nowhere in here does it tell us what it is. Remember, it's required to tell us in very extreme detail what we're investing in. Get down to the address and website, the phone number and website, but then we have no physical address. That's not acceptable. Then we have the Better Business Bureau stamp, not acceptable in a legitimate offer. So right off the bat, I looked at this and I knew something was fishy about it, and I wanted to investigate it. Once you know what to look for, once you know the real thing, you'll know a fraud when you see it. Again, going back on the difference between RIAs and brokers, this is just, the fiduciary for RIAs. There's fewer RIAs than there are brokers in the United States, and that's based on 2014. I need to update that number, but it's actually not changed other than the number of brokers have decreased over the years. The difference is disclosure, and again, no matter how nice their office is or how sharp their car is or how well dressed, look them up, check into their background. It'll save you. I had a lady come to me in her late 60s that had been scammed out of $1.6 million by a registered investment advisor. And I went and pulled him up on the search here, and I found him. The man had a $500,000 tax lien. He was up against the wall. He was a broker. He sold on commission. You can imagine everything he sold her was high commission, and he churned her account. She ended up suing his firm and getting about half of her money back. It was very painful, but always look people up before you trust them. Okay, at this point, I'm open for questions, and hopefully I offer a few answers.
All right, so if you have questions, you can put them in the chat, and we can definitely send out all of the slideshow, part of the slideshow, whatever you want to send me. If you send it to me, I will send it out in an email to the attendees afterwards.
Okay.
That's perfect. So obviously, I think one of your biggest tenets is do your research, right? So if there were like 3 top things that you would tell people about avoiding fraud in investments, what would they be?
Well, first of all, check the registration of the person that's talking to you. If they're not registered in investments, stop right there. Don't do it. If they are and they pass that scrutiny, there's nothing wrong with sleeping on it. Give yourself some time to think about, is this in line with your goals? Is this in line with what you're trying to accomplish? Does this make sense? Do you understand it? And then the third item would be seek that full understanding. Read all the paperwork. It's your money. You should know where your money's going and how it works. Okay? I don't even want a client who says, I trust you, Wes. Nope. I appreciate that. That's very flattering, but it's your money. You need to understand and know where it's going.
And if someone had no understanding of any kind of investment or anything like that, where would they go to start that process of kind of learning what they need to know?
Well, again, it's kind of like if you've never had it, my children, when they got to be about 30, I said, you better get you a regular doctor and start having physicals. I don't know a doctor. Well, find one. Start asking people you know and you trust and get a referral. Check your insurance company, see if they cover it. Well, the same thing on an investment professional. You're young, you're starting out, go to your parents' friends, go to other young people you know that have started investing. Ask them who they're working with. Get that referral to someone, then check them out, and then contact and work with a professional. There's nothing wrong with professional advice. We all seek it for legal and banking and medical, do the same thing. It's a little bit presumptuous to think you can do it all on your own. So.
All right, well, it looks like we don't have any questions, so I'm going to end with this. If there was one thing that you could tell people about investing and getting ready for their future, what would that one thing be?
Yes, start saving as soon as you can. I've had people come to me in their 50s, they've raised the kids have gone to college, and they go, I haven't even started saving for retirement. Don't panic. Start. Okay? At any age, start. Start putting aside some money. Pay yourself first. Have it come out of your paycheck into your 401k, or have it on a direct deposit into your Roth IRA. But start as soon as you can, and don't worry about the past. Don't beat yourself up if you're 58 years old and you're just now starting to save. Get started. If you're 27 years old and you're starting to save, fantastic. Get started. I've had clients start in their 20s, 30s, 40s, 50s, and if they really get serious about it, they all turn out okay.
All right. Well, thank you so much for your time. I really appreciate it. And I thank everyone who attended, and we hope that you got some great information today, and enjoy the rest of your day.
All right. Bye-bye. Thank you.
Thanks. Bye-bye.